Well, from the weather to the economic forecast, Ben is here looking at what voting leave, Ben, might mean for the UK.
Yeah, so many ifs, buts and maybes, aren't there? But this is quite an influential report. And it's a forecast from the EY Item Club, and we tend to listen to what they say because they use the same sort of models that the Treasury uses. Thanks, guys. Morning to you too. Yeah, this morning, that EY Item Club predicting that economic growth could take a hit as a result of that vote to leave the European Union. They say growth will slow significantly for at least the next 3 years. It also says unemployment will rise and people will have less money to spend. But it's not all bad news. They say that Britain's exporters are likely to get a big boost from a weak pound. And that is good news for exporters like this one, based in Manchester.
We've seen a marked increase in interest and inquiries and ultimately revenue as a result of our sterling-denominated products being more viable, more attractive for international customers that historically haven't quite been tempted to purchase our products because of price or brand awareness or lack thereof, whereas now it's almost too cheap for them to say no. So we think this is a short-term opportunity to get us into many department stores internationally, and we're confident in the quality, the value and the customer service that we offer should put us in good stead in the medium and long term to continue trading and for the business that we do in our new markets to flourish.
So that's the case for one business. Let's speak to the economist John Ashcroft, who's with me. John, good morning.
Good morning.
So we heard there, one business doing well because the weak pound means if you're an exporter, your things are cheaper abroad, and that's good news. I'm interested in whether that balances out the other problems we might have, this sense that actually imports for us all are going to be more expensive.
Well, they are going to be more expensive. And actually, from an oil point of view, if oil and sterling stay at the same level, the price is going to rise by 35% by the final quarter of this year, and could be 50% by the first quarter of next year. So inflation is a looming issue, no matter which way the economy goes.
Well, this EY Item Club forecasting a short, sharp shock. It's hard to say. It's even harder to digest. They suggest 3 years of economic pain. But then in the longer term, things start to pick up. And we've talked a lot about what happens after we leave the European Union, indeed if we do. Just paint a picture of how you see it. What do we expect the economy to look like?
Well, I think the EY survey is a little bit gloomy. And I think it's very much reflects the model we anticipated following the vote, that there would be uncertainty, and uncertainty is the big, terrible thing for business. This will impact in theory, on investment and recruitment, and also consumer spending. That people will be nervous about jobs and about incomes, and they'll be saving and not spending. But this is very much a sort of unilateral forecast. We've yet to see what will happen with government spending, because we understand the sort of purse is going to be released for government spending, and there's no impact of that reflected in the EY forecast. So it's far too gloomy for next year. I think most people accept the economy has slowed in the first half of this year, and there'll be some slowdown while people pause and reflect. But it's important also to remember that nothing has changed yet, and nothing will probably change for 2 years or even 5 years. So we may see no real changes for the UK economy for the next 5 years. So what's the gloom all about?
And speaking of things that haven't changed, interest rates. A big surprise on Thursday, there was no change in the interest rate. So it means that stuff isn't cheaper, money isn't cheaper, which is what we expected to happen. Clearly, the Bank of England is thinking, look, we need to wait and see what actually transpires in the real economy before we make a move like that.
I think they're assuming that we want some kind of joined-up statement on government policy, because there is no real benefit from reducing interest rates much further. There could be some benefit from a funding for lending programme, but generally, the Bank of England want to wait and see what the government statements will be. And we've had a good thing in the sense that there's been a new administration put into place quickly. Now we need some positive statements on the airport strategy, on HS2, on the plans for infrastructure spending, but also a clear statement on what is going to happen to EU nationals in the country, and also what will happen to the spending plans. So they should really ring-fence the money that's coming in from Europe, and quite quickly.
John, really good to talk to you. Thanks very much, the economist John Ashcroft there. I'm going to be back after 7 with details on that big takeover that's expected to be confirmed this morning of Arm Holdings. I'll have all the details for you.